G'day YouTube, 1MJ here and welcome back. Alright, Friday morning here in Australia, almost Friday lunchtime, and again the market has gone down even further. Very minimal at the moment, sort of down 0.1%. So not a whole lot, but overall still down. Bitcoin dominance sitting just under 44%, ETH dominance sitting under 17%, and gas prices, i.e. Gwei, still very cheap, only 8. But what we can see is it's generally red. Nothing sort of too major, and even in the last 7 days doesn't look too bad. But again, we are focusing on the top coins at the moment. So let's have a look. Has anything done well in the last 24 hours? All right, there we go. We can see some things have done fairly well. I don't know what XDC network is, but they've pumped. Theta Fuel continues to pump. Now again, that's with the news of the Theta mainnet coming out soon. Phantom doing all right. Arweave, there we go. Theta network token as well, up 10%. So definitely, some coins that are moving. Really only a couple of good movers, i.e. double sort of digits, and particularly again XDC network, quite a good pump, and even over the last 7 days for those coins. But the market is down, so let's have a look. What hasn't fared so well in the last 24 hours? All right, AMP down 10% last 24 hours, but hey, you're still up nearly 40% for the week, so probably not too worried about that. Thor Chain, Horizon, Kasama, Chile's obviously having a bit of a pullback, always to be expected. But again, still they're up 15%. And Shiba Inu, believe it or not, still up nearly 15% for the week, but down in the last 24 hours. Look, couple of alright gains, no real major losses, hence why the market is only down a little bit. Alright, I want to have a look at something. We'll go and have a look at the Bitcoin chart, but then after that, I get a lot of people, I see on Twitter and sort of have messaged me via Twitter and also on YouTube, saying, how do you continue to dollar cost average in? What happens, eventually don't you run out of money? Well, I guess sort of yes and no. A lot of people, particularly new people, they might have a couple of $100, $1,000, whatever, $50, and that's all they have. They can't continue to dollar cost average in. They've just got one fixed amount of money, so they throw it all into the market at one time, and then they're stuck. If the market goes up, then congratulations, that's awesome for them. But if it goes down, then they just continually get wrecked. So really, the ideal way is to lever in, both in an upwards trending market and in a downwards trending market. So again, it is that dollar cost average. Now look, it's not that you can't maybe sort of get lucky and get in at a really good time, and just going all in isn't a bad idea. Generally, it's a bad idea going all in, but you might get lucky. Like if you were lucky enough to get in, March last year after the big crash and just went all in, then you've seen nothing but profits and you're doing really well. But that rarely happens. So we're going to look at dollar cost averaging once we have a look at the Bitcoin charts. All right, so Bitcoin chart, again, not really much has changed. We have come back down again, but still in this upwards trend. So like I said, I expect us to kind of bounce around here for a while. Now, has the weekend, traditional kind of pullback already come, and do we just start to make our way up a little bit over the weekend? Who knows? We'll have to wait and see. I wouldn't be surprised again if we sort of break down out of this trend and again just continue sort of sideways choppy action for some time. That's what I'm expecting. Is that what I can guarantee is going to happen? Absolutely not. Anything can happen. But we've just been doing this for quite some time. It really does feel like accumulation. This was distribution. Now this feels like a bit of accumulation. But we'll have to wait and see. All right. Again, not much happening on the Bitcoin charts. We've really just been chopping around for quite some time. Pretty much since, well, there you go, the 19th of May. So that's basically a month of really just sideways action. Downwards at times, upwards at times. All right, dollar cost averaging. So what is a good way to do it? All right, here's a little bit of a chart I did. So this is an upwards trending market. Now people would be saying, well, if it's trending upwards, why aren't you just putting everything in? Because even in upwards trending markets, they have days where it pulls back, and sometimes it can pull back a whole lot. So if you've just been putting all your money in, you have absolutely no way of buying buying the dips, as they say, unless you just happen to have money on that day. So this is what I put together. So in an upwards trending market, 70% of what you can put in, if it's $50 a week, $50 a month, $50 a fortnight, or any number, it doesn't matter, whatever the pattern is, put 70% of what you're putting into the market into the cryptos that you like. So whether it's Bitcoin, Ethereum, some random shitcoin, whatever it may be, that's your choice. But then have 30% of it in a stable coin. So that way, when there are dips, you've got stable coins sitting on the side and you can go, yes, rightio, no worries. Boom, I've got some money to buy. Now, here's the caveat to that. When it dips, don't just put all of your stable coins in at one time. Unless it's been dipping and now you think the bottom's in, you could do that. 50% of your stable coins on a dip, when you think it's a good time, you've got to make up your own mind. I can't tell you exactly when. 50% of your stable coins on the dip. And the reason we do that is what happens if it dips some more? Well, then if it dips some more, you put 50% again of what's left of your stable coin in. And the reason we're again only putting 50% in is what happens if it dips some more. So we just keep putting 50%. So we've always got money to buy the dip. Now, don't get me wrong. Towards the tail end of it, you're not going to have a whole lot. 50% of, $100 then leaves you $50. 50% then leaves $25. 50% of that then leaves you, $12.50 and all the rest of it. But at least you have money to put in for when it goes up. Now, this is in an upwards trending market. So when we're in a bull market, what about if we're in a bearish market? So now all of a sudden things are going down. Now, a lot of people are going to say, well, just simply sit on the sidelines and wait. That's something that you can do. But how do you know when the market is truly at the bottom and on its way up? And, if you haven't been putting the money into stable coins, you're unlucky to have saved it. So look, you could go straight into stable coins, but here's what I like. So again, it's a 70-30 on the way up and it's a 60-40 on the way down. So when I feel like we're legitimately in a bear market, then I'm only putting about 40% of what I'm willing to put into the actual cryptos that I like. So something like Bitcoin and Ethereum. And then 60% of what I'm putting in. So again, let's say I got $100 a week. I wish I had $100 a week to chuck into crypto. That'd be good. But I'd be putting $40 of it into crypto and then $60 of it into stable coins. And again, I'm waiting for a pattern where I feel like we've reached a bottom. And I've gone through those before. So 70-30 on the way up, 70% into crypto, 30% into stable coins, and on the way down, it's only 40% into crypto and 60% into stable coins. And the reason I'm not just going all stable coins is because, again, I'm not going to be able to pick the exact time that it comes up, and there's going to be fake outs and breakouts and all sorts of things. So I'm really waiting until I see a bottoming formation, and then even then I won't just quickly jump and throw everything in. I'll probably start to go 50-50 for a little while once I feel like we're at a bottoming formation. And if I see that bottoming formation last, then I will start to go a lot heavier. But I'm going to always try and have stable coins, at least a percentage. Again, like at the moment, we're traveling sideways and people are unsure in the market. For me, I'm happy to just put most of my money into cryptocurrency at the moment. I don't think it's going to go much lower, but if it does, I got some stable coins on the side and I continue to dollar cost average in. And again, I will adjust what I'm doing. If I feel like we're in a downward market, then this is it. But I always want to have stable coins on the side just in case we do go lower. Hence why, again, 60% of stable coins. I feel like we've hit the bottom. 50% of all the stable coins I have at the time, I will then put in the market. But I'll still have 50% left of my stable coins in case we go lower. And if it goes lower, again, 50% of the stable coins that I have left over goes back into the market. But I then still have stable coins on the side. And it's just rinse and repeat, 50% every time until I feel like we're on our way up. And again, on our way up will be a lot of sideways, small moves for a long, long time. That's what happens in the bear market before it then starts to really pump up. So that's my theory. Downward trending market, 60-40. Upward trending market, 70-30. Crypto to stable coins. All right, let's move on. Some pretty interesting stories. So the Graph protocol. I really like the Graph and what they're all about. So the Graph Foundation's taps protocol infrastructure development for $60 million grant. So in addition to receiving the $60 million grant, StreamFast will become part of the Graph's ecosystem and a core component of its long-term infrastructure plans. So again, I won't go too much into what the Graph's all about right now. I'll let you go and do that research. I have explained it a few times, but I like the Graph protocol and what they're all about, and it's good to see that they're still teaming up with people. There's grants and money going out there and things like that. So sounds pretty bullish for the Graph, if you ask me. That's my personal opinion, never financial advice. Now, Uniswap version 3, getting ready to launch. I think it might have launched by now, actually. And again, there's talk about the liquidity providers, and now you've got to really manage your funds to make sure that you can gain the rewards. So that's part of the new Uniswap version 3 that has put a lot of people off. So Gelato Network launches G-Uniswap V3 management token. The new system will rebalance Uniswap V3 positions every half hour, allowing users to reap additional fees with less single-sided liquidations. So while Uniswap's highly touted V3 has been racing to the top of VL charts as of late, the need for active management has kept some retailer participants out of their protocols, a problem that a new product from the Gelato network is aiming to fix. So V3 obviously is out, shows how up to date I am on that. I thought it was still in the works, but the problem is now everyone, before you could put your liquidity in and just basically set it, forget it. Now with V3 you have to actively sort of maintain it to make sure that you're not getting liquidated and losing out on rewards and things like that. So G-UNI aims to perpetually maintain a liquidity rate of 5 to 10% within the current price of an asset pair, with an Oracle network checking prices and rebalancing liquidity pool position ranges every half an hour. G-UNI also automatically reinvest trading fees for compounding returns. So this sounds really, really good. I remember when I saw this being spoken about before, I was like, who's got the time to constantly try and manage something and make sure that you're not getting liquidated and all that? How good would it be if there was something that would actively do that for you? And it sounds like G-UNI will be doing it. So this is different to using your Uni token to reap some of the gas fees. That's different. I don't think you'll have to do any of that with this, but if you're now providing liquidity to Uniswap version 3, you have to be actively watching those things and ensuring that you're not getting liquidated in that. And it's good to see, because for retail average day users it's just too hard, and hopefully this G-UNI token will alleviate all those pressures for the average user. And again, we don't want it just the really big players who get to make all the money. We need it, the use, so everybody can use it and everyone gets a fair share of it. So I really, really like that. All right, Ripple Labs nabs new legal victory in XRP lawsuit as the judge denies SEC access to documents. So again, this continues to go on, and it does feel like, at least at the moment, that the judge is somewhat sympathetic to Ripple, but that doesn't mean the outcome will be like that. But there has been a number of things that have sort of gone the way of Ripple of late in this court case. So federal judge Sarah Netburn is denying the SEC's requests to compel Ripple to produce documents connected to its past lobbying efforts. So look, we all know Ripple has paid money to parliamentarians and that to lobby them to be in favour of Ripple and all the rest of that, and I don't have any issues with it. It's not bribes, it's lobbying. That's different, although some people might say they're very, very similar, but it seems the judge says no, we're not going to have a bar of that. So again, that may be something that seems fairly bullish for people in the XRP community, part of the XRP army, as they'd say. Right, NFT real estate. Whew, here we go. So Republic Realms sets an all-time high value land sale for Ethereum-based open-world crypto metaverse game Decentraland. So Decentraland land has sold for more than $913,000 worth of mana. So good Lord. That goes to show you where this whole NFT space, and particularly, the virtual space, is kind of go. People are, starting to fork out mega dollars, and, it'll be interesting to see if it pays off in the future. You can only hope that it does. I haven't bought any land, and again, I just don't know enough about that whole kind of NFT space to get involved in that side. But I'm definitely, like I would invest in Decentraland. I had some, didn't perform well, sold it, and of course, after I sell it, it starts to perform well. But I have other places, within the NFT space, and look, I may buy some more Decentraland. We'll have to wait and see. All right, Mark Cuban. So calls for DeFi regulation after crypto investment goes to zero. So as it says, it's all fun and games in DeFi until you lose your money and wish you had consumer protections. So last night, billionaire investor Mark Cuban said he was hit by the sudden collapse of the cryptocurrency called Titan. The token shed nearly 100% of its value over the course of a few hours. Now, after losing what he's categorizing as a small percentage of his portfolio, he's calling for increased regulation around stablecoins. Now, I'm not so sure whether, it was the way things are sounding at the moment. So, as I said in my thing yesterday, was it, a hack or a rug pull? This is what the actual company have come out and said themselves. All right, so first, in-token crash postmortem. Iron Finance says it suffered crypto's first large-scale bank run. So this is what they're saying happened. So a negative feedback loop was created when a series of large token holders tried to redeem their Iron tokens and sell their Iron Titanium token, which is the token of the Iron Protocol. In turn, that caused everyone else to sell. So basically, they're saying that, a couple of big whales started to sell, and then basically, everyone was kind of jumping on board trying to sell. And that's the problem with tokens, where too much of it is held by any one person. It is also one of the reasons why I really don't do any of this liquidity farming. I've just heard too many things like this. And as I said yesterday, you see all the videos. There was a ton of, YouTube videos and people thinking they're going to make millions, off these kind of things. And look, some people are going to get lucky and they will. Most people, I think, are going to get burnt and they just simply won't. So I don't really do much liquidity farming at all, other than I do some Matic farming via Aave on Polygon. Aave's been around for a really long time. They've proven their worth. I'm happy to do that. But that doesn't guarantee that nothing could happen to them. But that's really about as far as I go with liquidity providing. Well, not true. I do Kyber Network as well. But again, I haven't been able to use Kyber for a long time. So hopefully now that they've gone onto Polygon, those will change. But I'm fairly skeptical of this. I really, it'd just be hard to think that, it all happened from when Titan went to $65 and then it dipped down to $60, so only a $5 turn, and then all of a sudden just, the arse of it fell right out, basically, is what happened, and a whole stack of people have got wrecked. Now, the Titan protocol and its members and that have come out and said that they're going to find a way to, redeem everyone's finances. But that's what always gets said at first when things like this happen, and then eventually later it comes out, look, we can't pay everyone back. What we're going to do is give you, 1 cent maybe to every dollar and something like that. It'll be interesting to see if Titan can come back from this. That is, a lot of money went into it and a lot of money just got pulled right out from it. So, we'll wait and see. All right. Here we go. Goldman Sachs say Bitcoin is not an investable asset class. Dogecoin is ideal for speculation. I would somewhat agree with that. Now, the bank, despite showing interest in Bitcoin recently, is still warning its clients against investing in crypto assets. I'm almost 100% certain once this is all over, you're going to find out that they were buying up big while they were saying all of this. Could be wrong. There's no guarantees in life, but generally this is what happens. These big companies and big players and that, they come out and FUD things. And then what you find out later is that they were actually buying it. Not always. Sometimes people are FUDding something, or it's not even FUD. They're just saying it's shit because it generally really is shit. I don't think that's what's happening in this crypto space at all. I think there's a lot of these big entities, building their positions quietly and keeping everyone out of the market. And once they've got their positions, then they're going to start singing its praises, and they're going to say, no, I think, it's now coming back and this is probably a good time to buy, because they've bought their positions and now everyone else comes in after and raises the price. And look, that's the same for us though, hence why I'm buying. I have no issues with buying crypto, period. Bull run, bull market, bear market, sideways traveling market, I don't care, because I fundamentally believe in cryptocurrencies, and I believe it is the future of finance. Is it going to happen? Sorry, has it happened today? No. Will it happen tomorrow? Probably not. Do I think it's going to happen in the next probably, sort of at least decade? Yes. I think it is going to happen in the next decade. Is it going to fulfill everything in the next decade? No, I think we're probably still maybe even 2 or 3 decades away from that. But within the next decade, I think some of these, I can't tell you exactly which ones, I can tell you the ones I like. I can't offer you financial advice, particularly Bitcoin and Ethereum, super bullish on those. Still a little bit on the sideline with Ethereum because I need to see ETH 2.0, but Bitcoin, I don't think it's going anywhere. I'm happy to put money into Bitcoin. And again, the DeFi projects that I spoke about yesterday, I really like those, but I can't put my hand on my heart and tell you they will be around forever. I can't even say that with Bitcoin, but I'm more positive on those kind of crypto assets having some long-term value, but particularly Bitcoin. Again, that's my my number one pick, and it's what I've put the most money into. Look, my Ethereum's worth more just because it's gone up by more, but I've put more money into Bitcoin, and I will continue to do so pretty much forever. I just want to have a position in it, and it's that old saying, when is enough enough? I don't know. Don't get me wrong. Once it starts to break into crazy sort of territory and gets on its new run, I'm going to be buying less of it. But when Bitcoin is below its old all-time high, it doesn't matter which way it's going, I'm happy to put more money into it. But once it goes into price discovery, I start to ease up on the amount I'm putting into Bitcoin, and I'm generally focusing because it's already starting to run. When Bitcoin's running, probably focus on altcoins. When Bitcoin stops running, the altcoins are then going to go crazy, and then you can go back and forth between stable coins and jumping in and out of Bitcoin if that's what you want to do. But I put more into Bitcoin when it's going down than I do when it's going up. Now again, not just slowly creeping up. Happy to put money into Bitcoin, but when it's going on a parabolic run and when it's breaking into price discovery, I definitely put less into it, and I'm going heavier into the altcoins because again, I want to preempt what is coming, and that's generally the way it is run. So Bitcoin runs first, then the altcoins. So I'm getting into, when Bitcoin's dropping and going down, I'm putting more into it, and I'm letting the altcoins run. And then, when the altcoins are starting to run, then again, I'm taking profits out of those when they're breaking into new all-time highs and all the rest of it, and starting to put it back into Bitcoin because that's, Bitcoin's probably found its bottom then or dropping, but that is the granddaddy of them all, and that's where I want to have my biggest sort of holdings. Again, my Ethereum holdings are bigger, but that's only because they've gone up by more. But Bitcoin and Ethereum are my kind of two favorites, and I really do see long-term value from those. But again, still waiting on Ethereum to get that 2.0. All right, last but not least, and this is pretty scary. So scammers are now sending Ledger users fake hardware wallets. Please beware. So if you randomly have a Ledger wallet show up that you haven't ordered, throw it out, because I can assure you Ledger aren't handing out free ledgers. They simply are not. This is really scary. So scammers are sending fake hardware wallets to people whose data was gathered via a third-party data breach. These fake wallets contain hardware designed to steal the user's crypto. So even if you don't store anything on it, if you simply plug it into computer, there's probably some malware or something like that on there. So if any free hardware wallets show up that you haven't, ordered, throw them out. Throw them out straight away. They are starting to get so creative, and unfortunately they'll get a ton of people with this. I just know they will. I hope they won't, and I wish they wouldn't, but I know they will. They're going to have paid some money to build these things, and I'm sure they're not overly expensive to build, particularly fake ones that just have ransomware and all the rest of it on it. So they're going to invest, probably a couple of $1 million in getting these fake ones built, but unfortunately they will probably rake in tens, if not hundreds of millions. So let's get the word out there that, this is going on, and ensure that, as little, preferably nobody, gets scammed by this kind of stuff. All right, that's it from me. Stay safe, be kind to one another. If you outsmarted the market, congratulations, you're doing well, and I'll see you next time.